Permissionless 4 is right around the corner, June 24th to 26th in Brooklyn, New York. We're seeing new crypto applications cropping up all over the place right now, and this conference will be a place to get developers, investors, and founders all in the same place to have high-signal conversations about what crypto's future should look like. This one's for the memers, the dreamers, the builders, and the token lovers. Don't miss out. Plus, you can use the code Lightspeed10 for 10% off at checkout. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Hubenek, alongside Mert Mumtaz and Dan Smith, and we're going to be rounding up this week in crypto. Mert, Dan, I hope this podcast recording finds you well.
It always does. Coin it.
We should coin this live stream once we're done. Well, since Mert said coin it, I think that means it's our cue to talk about Zora, the platform where you can find the fair market value for your thirst traps. For the uninitiated, Zora is this Instagram meets Pump.Fun kind of platform, and Base, the layer 2, minted a quote-unquote content coin on it, which kicked off a lot of usage and also a lot of controversy over the past week. There's a lot to dig through here. Dan, I know you just did an excellent 0x research podcast on this yesterday. Mert, I kind of want to start with you because you're always the SocialFi bull on this show, always talking about how SocialFi is the future. But I get the sense that you're maybe not as big of a fan of Zora and content coins. So what's your overall take?
Very glad you asked, Jack. And so I will clear this up once and for all. I thought I did a good job, okay job, at least on Twitter, but it's Twitter. I'm a big fan of Zora. I think the app is actually a good idea. And I actually think it's fun. And I actually downloaded the app at least a week before this all happened. I didn't post anything on it because I was scared. But it seems fun, seems good, Jacob is smart. It's an experiment worth running. So to be very clear, I have zero problems with Zora or the app or the idea, none of this. So then, which brings out the second part of the equation, which is, okay, so what do I have a problem with? Well, if you are the largest crypto company on earth and you just shill direct links to absolute shitters with 4-digit market caps from Maine, while you just virtue signaled about how this was very extractive behavior on other chains a few months ago as an entire collective, let's say, that's the problem. If you're going to hold double standards, or if you're going to have standards, enforce them consistently, right? If you're going to virtue signal, do that consistently too. You didn't invent anything new because you changed the name of the coin. Okay? So I think I don't think really anybody actually has a problem with Zora. Maybe some people that I didn't really see too much have a problem with it. But I think most of the problems stem around Base and, Jesse, right? Where even yesterday, Jesus Christ, this is even hard for me to even recount the sequence of events because it's so absurd. This guy matched with somebody on Hinge and said, want to get on chain or something, took a picture of it, took a screenshot of it. By the way, you're not actually supposed to do that. Tweet it. And then some guy from Solana probably just made it into a pump coin and then shilled the contract address. And then that guy bought it. The guy who actually posted the first picture to begin with. But then Jesse gets mad that somebody is profiting off of somebody else's creativity and it's a hilarious meme. And basically pressures the guy into actually making it a coin on Zora. And then once he does that, he publicly shames the guy on his own Twitter and then directly links the new coin of the screenshot of the girl on Hinge. You click on it, it's 5K market cap. And nobody's asking, how the fuck is it being a creator to screenshot your Hinge? Okay? Or how the fuck is it? There's so many things wrong with this. And then that's not the first time. Obviously, he did that the day after saying, Base now has more coins than Solana. It's dude, you've literally made every fucking action that you can make into a coin. Okay. And then I think Dan will give the numbers on the market cap on those after. And then, so I think it's much less. The problem is not really Zora. Oh, I mean, I guess they had that airdrop thing and the tokenomics that I know the Blockworks boys didn't really like too much, but like I didn't really look at it too much. But so my problem lies pretty prominently in the leader of the chain directly shilling shitcoins with links and then saying they're somehow not shitcoins because he changed the name. That's the part that I have a problem with. Because like, if me and Tolly did this, first of all, they'd be much higher than 5P market cap, okay, because the trenches are alive. But like, we would basically be in jail for actually doing something like that, right? And so I don't like the standards.
Okay, so I think there's three pieces here. There's the app itself. There's the I don't know, let's call it like the marketing layer here from the base team and Jesse, and then there's the Zora token. I think there's like three separate conversations. I think they're all really interesting. 100% agreed on the first bucket, Mert. I think the app's actually very interesting. I've coined some things. I think it's fun. I like actually enjoy using the app. If you think about the life cycle of crypto social mobile apps, we have seen some absolute dog shit that like we sort of get forced to use. You're like, all right, here's the next social app. Let me get into it. Friendtech being an example of that. Forget about the actual mechanism. I'm talking strictly about the app right here. That app sucked, right? And then you actually use Zora. Feels like Instagram, works relatively smoothly. It's a little bit buggy here and there, but like broadly, it's a pretty solid app. That was already like, okay, now you've got me interested. And then the actual idea of the app, right? Like coining your content. There's been a lot of people that say like, the marginal cost of producing the next piece of content is zero, right? I just fire off a tweet. It takes 3 seconds. That's worth no dollars of my time. So therefore the thing itself is worthless, which I don't think that's true. 99.999% of content is worthless, but like that 0.001% is actually not. And it can be priced by the market. I see nothing wrong with that. If you use the app, it doesn't feel like you're trading shitcoins. If you go through Deck Screener and buy these tokens, yes, it feels like you're trading shitcoins. And so I think that was a huge discrepancy based on how people were viewing Zora, right? A lot of people just logged on to Deck Screener like they're used to doing, saw the post that, base is for everyone, which is the first initial post from the base account that Jesse tweeted, and was like, oh yeah, this is like the base meme coin now. Like I've got to go buy this, right? And like that's how the market or a portion of the market viewed the event. That is not how base or Jesse viewed the event. So that discrepancy caused a lot of this confusion. And so that's why I think the root of the problem was just communication. Jack, I know you got something to add here, but one point before that is the communication, I think, was the source of the problem, which I think you got at, Mert. And I'm kind of torn here. Like, I don't think every fucking thing in the world needs a 7-page strategy doc about how you're going to execute this. And like, sometimes you got to fire from the hip and test and prod. Now, there is a different element to it when I don't think you really had to squint at this to know how the market was going to react, to be honest. You're like, Zora is the first mover in this coin everything world. And the market's perception is trading shitcoins. And those things are merging together. And that will require some like education and communication. And that didn't happen. So I imagine that that's where like they probably feel the opportunity to have done better. Which actually Catherine Ross on the Blockworks editorial team just put out a post this morning about like, she talked to Jesse and he had thoughts about this exact thing, but I actually haven't read it yet. So I'm excited to give that a read. But yeah, I think that's where the missed opportunity was. And then once you like figure out, okay, the whole literal point of Zora is to coin everything. They're using an interesting multi-curve AMM on the back end called Doppler. I cannot stress enough, you should go read about that. It's a very interesting innovation on the AMM space. And that is supposed to limit sniping. It was not set up properly for launching a very high profile launch. I think they're working on iterating that. So that's like how this thing did get sniped. They're still figuring out this mechanism. And that's kind of why I say you need to test a couple things in prod.
Oh, I also totally forgot that basis for pimping and squirting. Totally forgot about that. So just to add on to my previous point, in terms of standards, I didn't forget that also happened. Okay.
This one got too clickbaity, dude. Jesse did not mean base is for pimping in like the prostitution of women. Obviously, everybody has sang "Big Pimpin'" by Jay-Z. The radio says "pimpin'" on that song. Like, that's not what he meant. But I get why it got torn and pulled that way, because it's like a very easy thing to do. That one, I'm like, okay.
What about squirting? What about squirting, Dan?
Okay, look, he clearly didn't. The intern made the video. My man, he probably should have scrolled through it, but I don't know. I think that intern had a very bad day.
I will say, like, if you look at the GIF or whatever it is, it's on the screen for like, you know, a fraction of a second. I felt like the basis for pimping thing was a little overblown. I did think the screenshotting a random Hinge profile and then but like dropping it on Zora was not a good look, and it was such an own goal. Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to Jupe and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem. Even beyond the communication, though, I don't necessarily agree that Zora is a great app. I've spent some time on it, and Dan, you said, you know, most content is worthless, but the 0.01, you know, top content is worth something. But I guess my follow-up to that would be, are the people creating the 0.01% content putting it on Zora? I think probably not. And if you open the app and scroll through, it's just a lot of slop, NFT culture kind of stuff. I don't like personally have any fun on Zora. And I think if you just like theoretically pitched me like, hey, we're going to do an Instagram clone that's really like just a little worse Instagram, and also you can double tap to buy things as meme coins, that's not that interesting to me. I think the crypto social should look meaningfully different from the existing social apps we have, because those are like pretty good. And I don't think that you're going to get everyone on crypto Twitter off of crypto Twitter to go start posting their banger tweets on Zora instead or something like this. I think like Vector from the Tensor guys is a cool crypto social app, because it's like social trading. It's fun to use. It looks cool, and it's crypto. There's nothing that exists like it outside. So I actually sort of disagree with the premise that Zora is even a good app in the first place. I think I've seen other examples of this, and I feel like I had some deja vu of like opening up an Instagram clone on my phone, and it has all this, you know, minted crypto slop on it. So I don't even really think it's a good app, to be honest.
Well, I think the content sucks, but I think that's like a hurdle you got to overcome in the future, right? Like, it's not. That's definitely shit today. I don't disagree at all. I'm talking strictly about like the concept and like, okay, imagine Twitter put Zora on the back end and nothing changed about Twitter. Like, then think about it. I don't know. Then I think
it doesn't work for like. I don't think it works for Twitter like content, because Twitter, I mean, you're basically trying information. Instagram is maybe where you're trying to flex a bit more, or maybe you have some appreciation for art, something like Pinterest. Then I could maybe see, but I don't even use those things, so I don't know. I'm not a very visual person.
Well, here's an interesting one, because you've had some like very viral tweets and like the millions of views. I think we talked about this last time, but now it's coming full circle. And like, I don't know, the one about coffee or whatever. And like quitting caffeine and your life sucked, right? Like, that was a meme that got circulated around the internet, and maybe it had some value based on the amount of attention it was getting at that point in time. Like, how do you think about that?
I mean, I don't know. I have thoughts in my head and I get them out. I don't expect to be paid for them. But Twitter actually pays you. I mean, I make like, I don't know, 2,000, sometimes 3,000 even, or even more per month on Twitter just from doing that. And like, I think that's basically what you would get
That
from
pisses
Zora.
me off. What? That's a
That's why I
part-time
tweet
job.
so much. Yeah, that's fair. That's fair.
Well,
I don't
but-
know.
but-
Like, I don't know if it's a good idea. I think it's interesting. The concept is interesting. I'm glad we have a shot on.
I think, yeah. I think that's the thing. I don't really think it makes too much sense to say good or bad. It's more of like, is it an interesting experiment, right? And I think it is definitely an interesting experiment. I'm always hesitant to say something is a bad idea just because it could just prove me wrong and I would get wrecked. But I don't. I think okay. So here's the other thing. The framing, and again, none of this is by Zora. It seems to be mostly by the other people on top of Zora. The framing is something like, this is good because it helps creators. Okay, so so maybe that's the problem they're trying to solve. They're trying to solve creators not getting paid or something like this. That sounds a lot like NFTs to me. Right? Except now every single NFT, now everything's an NFT basically. That's kind of what it seems like. And then maybe you have some liquidity because the token. And it's like, I think the interesting thing will be if it actually, to determine if this is a good app or a bad app, I think fundamentally you need to come back to it in 6 months and be like, did this actually help creators? I think that's probably the success criteria, because the content itself is going to be very niche in my view. It's never going to take over Twitter or anything like this.
Well, this goes back to the messaging point, because I think the creator revenue sharing is more a product of Base's kind of like ideological placement within Ethereum, where it wants to have a lot of users on the chain. Meme coins are really good at drawing users in, and so it wants to have some kind of meme coin equivalent on Base, which is fine. And like, if a blockchain is kind of a business, like, you do things that users want, and I don't find meme coins the most tasteful or whatever, but like, if you want to do meme coins, it's fine. Solana did it very successfully. I think though, because Base is kind of situated within this like Brooklyn beanie wearing kind of crypto is financial freedom crowd, it needs to pitch it as a form of like creator revenue sharing. But I just don't think that creators are ever going to use Zora. I think it's a platform for meme coins, which are largely like slop or just like funny videos of dogs, and that's fine. But I don't know. And for the record, like, I think Jesse, I think highly of Jesse. I think he's smart. I met him like once, and he was nice. I think some of the messaging is weird, but I don't think he's like a bad dude or anything like this. But it just feels like Base can't escape its own ideological priors, and so it has to do meme coins in a really weird way. And I guess what I appreciate about Solana, at least, is that like Pump.Fun is not going to cast any aspersions about what it is. It's like 4chan for tokens, kind of, and like, you can like it or you cannot like it, but that's just what it is. And I really don't like this is about creator revenue sharing, because it's not. It's about speculation.
I guess the last thing on this is just the token. So they announced that they were going to launch a token just for funsies. That's not a joke. That's literally what the docs say. Like, this token is just for fun. And then it's really hard to square that when you say that. That's fine, cool. You launched a meme coin. You have a meme coin launchpad platform. That honestly kind of tracks. But then you give 50% of the supply or somewhere in that neighborhood to the team and investors. So like, does this thing have value or does it not? I don't know. I'm like really over. Okay. I don't think anybody realizes how bad the liquid token investment landscape is right now. It is so bad. There is look, the mantra stuff is just like the icing on the cake of this is happening at scale everywhere and way more than the average person has like put the pieces together. So more to come on that, but because that's the environment we're in right now, for someone to launch like a for fun token, I think is just like a total failure to acknowledge the current status of the market. And then when you look out at teams doing things the right way, there are teams based in the US that have launched a token and talked about how, some of their other products are not securities, and written reports on this, and have a DAO that is actively talking about distributions of cash flows back to the token. So you see that happening today, and you see people launching new projects with MiCA compliant white papers. So I don't think you can hide under the veil of, there's regulatory uncertainty. Like, I don't think I have tolerance for that anymore. And like, I really do sympathize with that. And I think that's like a lot of the Ethereum DeFi, OG DeFi protocol founders had to actually deal with that. And so honestly, I think it's kind of insult. I'm not saying this is what Zora is doing. I don't know if that was the reason they did this, but I think it's kind of insulting to insinuate regulatory uncertainty when those founders actually had to go through that. And a lot of the decisions they had to make were directly impacted by that. But we have a crypto task force with an open door policy that wants to talk to teams in the space in the US. And I don't know. I'm actually getting annoyed saying this out loud. Like, you can't. We have to do better, or else the liquid token world will stop existing. So yeah, to see them do that is pretty frustrating. And then honestly, the token launched today. We're recording this on the 23rd, and it started trading earlier than the airdrop on centralized exchanges. And then it's like nobody knows what those deals
look like. When is the airdrop?
Nobody knows. There's literally zero communication from any of the official accounts at the moment. It's like, it's a bit of a disaster. And so now people are just going to get screwed over by like trying to rush and buy it on exchanges. And there's been no communications. It's bad. Like, even Zach XBT has tweeted out, like, just lack of communication and transparency is going to lead to people getting scammed, and it will. I'm sure there'll be drainer links flying around because everyone's like, where's the airdrop? Where's the airdrop? It's already trading. I don't know. It was just like a masterclass in how not to launch a token, to be completely honest.
Just to like clarify what you're saying here, nobody who received the Zora allocation can claim their airdrop yet, as far as you understand.
That is correct, yes.
And if you look at the chart,
you go to the Zora handle, the last tweet was from 3 days ago. Okay, yeah. They literally just tweeted it. So there's probably about an hour gap in between this thing actually trading it and them posting from their official account.
Did you check Farcaster?
No, I mean, that's a semi-decent point, but like, that's just an absence of acknowledgement of where people are today. Like,
oh yeah, 8 minutes ago.
And this thing has already fallen 50% from the moment it got listed on Gecko Terminal. So, or even more, it looks like. Yeah, it's a bad look. There's been a lot of chatter recently too. You mentioned Mantra, Dan, about market makers coming into the spotlight and sort of a lot of these opaque market maker OTC type deals that tend to happen, and how people may or may not be manipulating crypto markets. And like, I'm not bringing this up to say that Zora is doing this. I have no idea what the market maker situation looks like behind the scenes, but I'm just curious for who would want to market make for a token that the team explicitly says should have no buyer because it's just for fun. Which to me is just a code.
That's the problem,
for like,
is we don't know if there are market makers. We don't know how they get this listed on exchanges so quickly. We have no idea. There is zero disclosure and transparency, and that is the problem. I don't care what your deals are. I need to know that they exist. There's going to be private terms, and we have to figure out what the right level of disclosure to the market is. And that's the problem right now. That is the sole problem about everything I just went on a rant about.
I completely agree. And I just don't. It doesn't make sense how there could be a business case for you to work as a market maker for a token that is going to be down only by nature. Like, if you're not even pretending that there's utility or you have any sort of equity in Zora, who's going to want to buy this thing? There's no buy side, so the market maker is going to get wrecked.
Well, they're pretty good at not getting wrecked and facilitating. The point has been to facilitate the trading of the thing rather than them to take directional bias on the outcome of the price.
Yeah, I mean, I'm sure there's all sorts of deals, by the way. Like, it's the buyer is not going to be the retail person. It's going to be somebody they've talked to. But I understand the liquid market is pretty shit right now. So I think getting HSOL would be your best bet.
There you go. Way to plug it. Okay, but last thing on this is so Ryan.
There's been like three last things, Dan.
Ryan. Okay, true. Ryan Connor from our team is really good about like being like, I hate that he's right, but he's really right. And this isn't their fault. The market will probably end up rewarding them, or has historically rewarded these types of things, right? And it's unfortunate that the retail buyer needs to come in and learn this lesson, but like, that's sort of the reality of the situation. And I think that's horrible and a terrible place to be. But we need, like, these tokens need to go down and down quickly and aggressively before people stop launching them. That's the core of the problem.
Dan, as a bookmark maybe to this section, do you have any Zora data from the research side to share? How organic, how real is the demand?
I don't know. We'll have to wait for now that farming is or airdrop has happened. You give it a week and let's look at the weekly data. But yeah, I don't know. I mean, who knows? I think they'll probably acknowledge that this is not what a token should be, and it's not like they can. If it was for fun at launch, I mean, I don't know. You could potentially make it for not fun later down the line. I don't know, but yeah, I share screen here, if you can pull it up. There was an interesting stat. So I was like, okay, the number of coins that get launched is always semi-interesting as a form of like, this is literally a token launch pad. Let's look at the number of tokens that get launched. Reasonable thing to do. And it's actually pretty even on Pump over the last couple of days. But one of the interesting things was looking at the market cap of all Pump.Fun tokens in aggregate and then all Zora tokens in aggregate and comparing the two. So there's a huge discrepancy in scale, and it's not perfect, right? Pump has been around for over a year, and it was like it basically catalyzed the meme coin activity in the industry, let alone just on Solana. So like you're comparing the new entrant to the giant here, but just to show a scale here, right? The aggregate market cap of Pump.Fun tokens is 245 times higher than Zora coins. Pump.Fun comes in at 3.1 billion, and Zora comes in at 12.7 million. And so to actually plot those things together is pretty funny. You can't even see the Zora bar on the chart. So I think that's just kind of interesting when actually thinking about the scale between these two systems. Yeah, that's just the announcement that came out 14 minutes ago now. But yeah, I just think that's kind of interesting.
Fuck it, I'm launching a token.
Dan, that Zora versus Pump.Fun chart was so unserious. I saw that on the feed and was like, why'd you like take the time to, it's just a fat bar and then nothing.
Okay. Well, the reason why the chart, the one that we track the other two numbers, because I think that's an important KPI for the platform, for both platforms. And I just tweeted out both charts, and Bread guy from, he works with Mega ETH now. He was like, dude, you got to same scale these. Come on. He's a Viz guy. He loves good charts. And I was like, fine, I'll put them on the same scale. But yes, that one was deeply unserious, the comparison chart.
Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your Sol and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your Sol and now your SPL tokens, all while staying secure. From Bonk and Pengu to Jupe and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem. Since we've shat on Zora for a good amount of time, I do want to talk about this.
Chat on the token. I think the app is cool. I like
the chat on base.
All right. Getting shouted down on my own podcast here. Since we have had a intellectually enriching conversation about Zora for some time, I do want to chat a bit about an interesting new study that came out on Pump.Fun. Dan, can you actually screen share this one?
Yeah, I'll pull it up as you intro and walk us through, give us a high level.
So Pine Analytics, which is one of these kind of anon analytics Twitter pages, pulled some data and did a study on Pump.Fun launches that I think reveal some interesting user behavior patterns on the platform. So basically they looked at same block sniping. So if someone creates a Pump token and then also buys that token within the same block, which as we know, Solana blocks are like a fraction of a second. So you're probably the creator also buying a token that you created. They found that over 50% of tokens are now sniped in the exact block they're created before they could reasonably be discovered via public RPCs or front ends. Same block sniping is no longer a rare edge case. It's the dominant launch pattern on Pump. A couple other really interesting stats is that 87%.
Where does it say 50%?
You can control F, Dan. At some point in here. Yeah. That was like a direct quote. And then they found that of these snipes, 87% were profitable and 85% of the snipers exit their positions within 5 minutes. So it appears that most pump tokens are now sniped in the same block they're created, and then 85% of those sell their buy within 5 minutes, and they're making money 87% of the time. So it's a very profitable strategy. I found this a bit troubling. Dan, I sent this to you ahead of the show to get your 2 cents. So I'm curious if you have a take on, like, is this not really extractive from users?
Yeah. So, okay. The other thing that they mentioned is how quickly these bots sell, which is a good indication that this is mostly like bot on bot crime, right? Like one bot launches token, gets sniped, other bot buys, then first bot sells. So that's one caveat here. And then the other one, like, first of all, yes, I think this is bad market structure, which is why I was so excited about Doppler. Doppler is really, really cool. I would love to see someone build that on Solana. The logic is awesome. I don't know if they actually have plans on bringing it over or not, the Whetstone team, but it's like it's a hook on Uni v4. So I don't know how doable that is. Just or at least it would take time to build. You probably have to build out an underlying platform as well. But this is why I think it's super relevant, right? Like, sniping is the problem in this game, and if you can stop it, you have a more interesting game. I don't think it's great, but I'm also not like, I can't sit here and say I'm surprised. Like, when you create these types of games, there are going to be sophisticated players that try to win the game. And again, I think it's mostly bot on bot crime, but like, yeah, I think you're taking a huge risk if you're trying to be the first buyer of a pump launch, for sure.
Yeah, and I do think if you mess around on Pump.Fun, you can, like, empirically see this happen. So, like, I've launched pump tokens just to screw around, and people will come in and buy them immediately, like, always, and like hundreds of dollars worth. And it's like, wow, I didn't know my token was so clever and interesting.
That's every token launching platform, to be clear, right? Yeah. Like, I posted on Zora. The same thing happens. Just to be clear, it's a smaller size difference, right? And it's probably less impactful. And then think about back to Friendtech, same thing. Like, they had an API, everybody was sniping. Like, when the big account would set up their account for the first time, it'd get hammered. So, like, this isn't a Pump.Fun problem. Pump.Fun is simply the largest. What is a problem, but it's not isolated there. It's the broader game. Again, I feel like I'm such a Doppler shill, but like, I can't stop saying it. It's a really interesting idea, and I hope it does work.
No one bought my Zora post, Dan, so I don't know if it always happens. Go buy my Zora post. I don't own any of it. Pine Analytics in this post advocates for basically putting flags on repeat offenders. So if you're someone that we can determine through on-chain data to be consistently sniping your own launches, there could be a warning flag or something, like, buy at your own risk, basically. I'm not sure if that really works, because you could probably just spin up new addresses, but it maybe makes you feel better, like TSA at the airport or something like this.
I agree with your point there. Like, it's too easy to beat with that specific thing. One thing you could do like that would actually stop being able to snipe them is, in the deployment of each token, you can include like the vote program, because the only program on Solana that cannot be included in a bundle is the vote program.
Oh man,
but I don't know if that's going to work.
Come on,
why won't that work?
I mean, it's just so autistic. I think it'll probably be patched. Maybe it is patched. I don't know.
Isn't that what Jupiter Ultra is doing?
I don't know if they're still doing it. I'm not sure if it's even patched. It's a massive cat and mouse game. There's just a lot of shit there, man. I don't know. I need to actually look at that report for myself just to understand. I think it was yesterday or the day before or something. I just didn't see it until now. Recent. I think, sniping is a problem. Now, the question of whether it's extractive, obviously it's extractive to some extent from other bots, especially. But like, these people are they're going for a 10,000x play. And so they're probably okay with, losing some fees or something. I don't know. The whole thing doesn't make sense to me.
Same. I do wonder, though, like, because we cite pump revenue often, and it's quite impressive. There's a lot of money going into it, but if it's all bot on bot crime, Dan, like, where's the revenue coming from? Is it revenue being extracted from retail users, or is it basically like the money that the bots are losing over time? Because I also, a feeling I've had for a little bit is that Pump.Fun is more of like a back end than a front end. I don't trade coins on Pump, and I don't know anyone who like actively goes about meme coin trading that way. Usually you discover the token on another platform and then you go to Pump to buy it, and it's a good like fair launch platform. But it's a two-parter there. But Dan, I guess where's the revenue coming from if so much of the activity is botted? And then B, like, does this speak to maybe there's not as much organic demand for Pump as we initially thought or have thought for a long time?
Okay, so we actually have data on this. So about 30% of the trading volume comes from external sources. So this is just like a list of those sources and trade bots, which implies that about 70% is actually on platform. And this is only of tokens on the bonding curve. So this is like looking at these pre-launch tokens and like where that activity comes from, which is interesting. These are probably all non-bots as well, right? If you're using one of these tools, Phantom Wallet, Dex Screener, BonkBot, Axiom, whatever it may be. So I think that's actually kind of interesting to think about. But yeah, I mean, look, if I was like underwriting Pump revenue, I think this is absolutely a conversation you need to have of like, how sustainable is this? And it's unclear. I don't know if to answer that question directly, like where is the profit come from? Is it just bot on bot crime, or is it something like, I don't know, more maliciously, it could be like money laundering, and just doing this to try to launder some sum of cash through exploits or whatever it may be, right? We saw the North Korean, what was it? What wallet hack was that? The huge one. OKX, Bybit. Thank you. They experimented with this. So I mean, who knows? Maybe that's happening at scale. And then, like people definitely lose money playing Pump.Fun. That's not even remotely up for debate. That is how casinos work. And this is like a less fair casino. So yes, people absolutely are losing money playing this game.
I think that's all the thoughts I had there. Let's chat about MicroStrategies on Solana. I know we've gotten to this previously, but a lot of those, I guess, predictions that we were talking about on the last show have come to pass. There's already another strategy on Solana called Upexi, something like that, which over the last year has pivoted from selling Disney figurines at BJ's wholesale market to buying crypto. So another one of these kind of small cap stocks, possibly facing forced delisting from its financial performance, gets a crypto makeover. GSR led $100 million private placement into that stock. Then last night we got the news that Cantor Fitzgerald and SoftBank and Tether are about to close a $3 billion crypto Bitcoin acquisition vehicle of some kind. Maybe the place to start, and I guess I'll throw this one to Mert. Should these things be embraced by Solana, these Solana acquisition treasury play things?
Jesus. I mean, I guess it depends what you mean by Solana. It's a network of people, and some of them might like it, some of them might not like it. Now, I do find it fascinating that there's not many ETH strategies, but there's actually quite a bit Sol strategies. They just kind of skip that in the middle. I don't quite understand why, to be completely honest. But I think the bet is something like, the way these things work is a bit financial alchemy, let's say. So I don't quite understand it, to be honest, but it's basically something like raise a lot of Sol, issue shares, have some sort of equity debt ratio, and then sell that debt, use that money to buy more, token price goes up, equity debt ratio is now kind of normal again, sell more debt. And then it's just, it feels like there should be some place where this just doesn't work. I think it's like within, the maturity date of the thing, if the price is like lower than it was over like a, I don't know, 5-year time period or something, then you're kind of in trouble. But like, I think probably roughly what's happening is these people just think that this was the generational bottom for Sol and that it probably won't go down below this in the next 5 years. Or at least in 5 years, it won't be below this, something like this.
Famous last words.
Okay. So that seems to be the bet, basically. And I think everybody seems to think that's a very good bet to take. Like, will Solana be below 140 in 5 years? Like, that would be pretty embarrassing, I think. And so what I hope is, I'm not going to say good or bad. I think, if it brings more attention to Sol, I guess it's probably good, provided to some threshold and they don't have outsized influence over the network or something. What I'll say is, I hope somebody can actually be a good sailor, because that's what the whole play is about. Like, you need sailor there saying like, oh, Bitcoin is steel, but Ethereum and Solana are wood. You can't build with wood. It'll like, shut up, man. Like, just silly things like this. I just hope the sailor of Solana, which I guess now there's like 3-4 candidates. I don't know them, which is kind of a concern. I hope that they actually represent the network in a good light and not just like a Bitcoin maxi light, basically. So like, I joked about it, and I tweeted this tweet after. I was like, maybe I should actually just start the 5th one or something, just because I fear that they're gonna like sell the network in a really shit way and then just embarrass everything. And so I just can't have that risk. But that's my only concern really for now. And then, if the price is lower in 5 years, then we're going to have other problems, probably.
Yeah, this feels like one of those things that, like, in the moment, it feels kind of dumb. And then when you look back a year or two from now, you're like, yep, no, that wasn't kind of dumb. It was really dumb. There's just there's way too much of this happening, right? And okay, you made a point about that, kind of like skipping ETH. There's the one on-chain one for ETH, and I don't actually know the status of that. I know they're trying to like raise funds for that. But the reason why I think that might have happened is I think this is like a weird, okay, specifically on the Solana ones. I think it's like a weird proxy for there's no ETF yet, and this is a way to get exposure to the asset. I think that's kind of silly because it's really not that hard to buy crypto in the US. But I mean, maybe for more institutional folks that have like massive compliance hurdles to go through, that actually makes sense. But that's just like, it feels weird. It doesn't add up in my head. And they're not small sums of money. The Cantor Fitzgerald one was $3 billion for Bitcoin, and there is an ETF there. So maybe this destroys the whole thesis. And then even $500 million for Sol is
I don't
pretty
think, I'll stop you there. I don't think it's a proxy for the ETF. I mean, it's just a levered play. Like, you just get more Sol out of it in terms of dollar amount than you would have if you just held the asset. Like, it is literally leverage. Now, it's a weird type of Wall Street leverage where you can't get liquidated, really, at least not if during volatile price things, and you need to actually wait until the time. And it's basically just taking advantage of like the borrow lend market and public equities. And then, they try to dress it up and they say, well, there's actually a real business here and stuff like this to hedge against like the worst case, which, maybe like, I'm not going to rule that out. Like, maybe you made the actual company so valuable such that even if Sol crashes, then the convertible debt still works or something. But like, if everybody's doing it, maybe there's just something I'm missing. I don't really get it, to be honest. It seems to be like there's like a shell company that's just like a fucking window dressing selling or something, and then now it's like a Solana company. GSR did one, which I don't know if that one's technically a Sol strategies, but it seems to be like a similar play where you're just parking a large amount of Sol. What's interesting though is I think this is like deeply related to 228. In two parts. One is like for 228. If the staking rate had went down, then these things wouldn't be as attractive because you wouldn't have as much yield, which, you can sell as dividend or something. But also, if you had seen the 228 proposal initially before they delete this part, was long-term staking, right? You have this class of investors who want to hold the asset for like 5 years at least, and they feel they should get more money for doing that. But now neither of those things are live. And so now you have the public markets where it's like, if you actually believe in it for 5 years, you can use this and it's like leveraged, and you get the yield at the same time. So I think there's that aspect of it. But like, it's very hard to read these people's minds.
I talked with the Janover / DeFi Development Corp guys the other week, and they basically made the argument that this type of crypto treasury play on a stock that's not related to crypto at all is actually a better way to do the like ETF thing than ETFs themselves, especially for a yield bearing asset, because due to the liquidity demands that you need to be able to like redeem and ETFs on command, you can't stake 100% of your SOL. Plus, if you're an ETF provider, you're not running your own validator. So you have to pay Coinbase's validator fees, which are really high. So they would argue that like the SOL Strategies playbook essentially is better because you can stake 100% of your own SOL to your own validators, which charge you no commission, and it creates a better yield for investors. I'm not sure if I buy that, but that's kind of the case they would make, is it's not just a proxy or like a stopgap until we get ETFs. It's better than ETFs. The other point I would make is that what we know about MicroStrategy is that it's basically a volatility play. Like a lot of the buyers of MicroStrategy stock are hedge funds that want to trade on the volatility. I don't think they're necessarily interested in the underlying Bitcoin. So it's
the
not
refinement of Bitcoin into new financial products. Didn't you hear? Maybe he's right about that. Maybe his crazy thesis is just dead right. I mean, that's not impossible.
I don't really get this too much, but my fundamental dichotomy here is something like, I'm not too interested in the games like this, where it's like purely financial, because I don't know, I'm pretty annoyed by the use cases really, and the fact that I can't use crypto and all this stuff. At the same time, I think if somebody does this but does it wrong, then it's gonna FUD my bags. And so I hope they do it right. So that like, I think I don't know how the Bitcoin people think about this. I don't really keep up with Bitcoin, but like, I don't think they all like Sailor too much, like anymore. I think they maybe used to, but like now it seems to be getting to a point where they're like, what the fuck, what is this guy doing, all this stuff. So it's just, I think that's okay for Bitcoin because Bitcoin is huge and it's super decentralized. On Solana, I don't know if that's okay. Like Solana is nowhere near Bitcoin. It's less than fucking XRP and BNB. So I don't know if maybe Solana is too small of an asset, and maybe that's the play, which is like it's going to be a much bigger asset or something like this. But like the skeuomorphic, like copying this worked for Bitcoin, so it must work for Solana, I feel a bit uneasy about so far.
I think if there was like a poly market for what event is going to kick off the next crypto winter, I think that MicroStrategy stock unwinding, collapsing to zero would probably lead the list, at least for me personally, in my own personal poly market. I do think that's going to be the most likely thing that kicks off a true next crypto winter. And I think a lot of Bitcoiners feel like they, without knowing it, have gone through the looking glass to where they're extremely reliant on Michael Saylor, who now Strategy owns something like 3 to 4% of all Bitcoin, which is unbelievable for such a huge market cap asset. I wonder, I don't know, but I wonder if a lot of Bitcoiners, if they could do that over, wouldn't go down the Michael Saylor path to where like a large amount of the current Bitcoin inflows just come from this one guy and his company, which the stock price could collapse and all the negative contagion of that trade unwinding. So that's kind of why I started with, should Solana embrace these things? Because I wonder if maybe there's like some short-term gains that come from, these micro cap stocks buying tens of millions of dollars worth of SOL, but long term, if everything blows up, obviously you don't want to make that trade.
Yeah, and like the way it would blow up is like the price has to be way lower in some amount of time. And I think that's like more of a crypto bet. I have no idea.
Well, lads, I think we'll end it there. It's been a fun one. Any last comments to make here?
I don't hate
to
Zora.
Solana. I don't hate Zora either. Come to Solana Accelerate.
Solana Accelerate. It's in May in New York, I believe. Blockworks permissionless, June, Industry City in Brooklyn. It's going to be a good time. Subscribe to the Lightspeed newsletter.
June 24th
4th to 26th.
Nailed it.
I was working on it yesterday.
Talk about that. Interesting. Okay, cool.
Come out to meet Mert, who is supposed to talk at permissionless in Brooklyn. He'll also be at Accelerate, I believe. Thank you, everyone, for watching. Please give us a 5-star rating, subscribe. If you enjoyed this, share it with a friend. We'll see you all again very soon.